Let's bring in Chris Carlsen, President and Chief Executive Officer at Birchcliff, for some perspective. Chris, thanks so much for being with me.
Thanks a lot for having us, Amber. Pleased to be here.
So the last time I spoke to you was on the back of that dividend cut where you slashed it by 50% in an effort to kind of stabilize the balance sheet and deal with these lower natural gas prices. Gas prices have come down even more. How do you think about the position that you're in?
Yeah, so I'd say when you think about the gas prices, Amber, as you just referenced, I mean, since November of 23, we've seen a significant decline in natural gas prices in the immediate term, no doubt. I think there are some positives, though, as we move into the back half of 24 and into 2025. So notwithstanding, we're seeing gas prices today on the spot market of $1.60. We're seeing a huge contango in the gas market where in 2025, the average price predicted into the future is somewhere around $3.40. So it's almost double what the price is today. And that's really on the back of a few things. Certainly in Alberta, we've got 2,700 megawatts of power generation that's going to be started up in 2024 in the province. And there's 3 different projects. That's a demand of almost 450 million cubic feet a day on a market that's 17 BCF a day. So that's certainly a demand pull. The other piece that I think a lot of people are waiting is LNG commodity price, or an LNG story here in Canada with Shell and the Canada LNG project coming on, as well as significant growth in LNG in 2025 in the U.S., where they'll essentially double their U.S. capacity from 12 to 14 BCF a day today in the next 3 or 4 years, going to over 25 BCF a day. So there's a significant contango in the market. We're obviously dealing with low commodity prices here in the short term, but certainly the outlook still looks positive into the back half of 24 and into 25 for sure. So
I hear you on those forward prices, but I'm curious about whether you have the levers to pull if that future does not present as you expect it to unfold. A lot of analysts noted that you left your forecasts unchanged for 2024, as well as your spending plans, even with these low prices. Do you have flexibility to pull back on that if the prices don't unfold the way you'd like?
Yeah, I think you're seeing several producers evaluate their capital plans. As you mentioned, Amber, last time we were on January 17th, we had adjusted our capital program to give us some of that flexibility and optionality. And so when you look at our capital program, we've structured it in a way where we'll spend, call it $100 million in Q1, $40 million in Q2, give or take. And then the back half, we'll spend about the remainder of that budget, which is about $110 million. So we have some flexibility as you get to mid-year. And I think that's one of the important parts for Birchcliff is that you're right, we're focused on that balance sheet. We're also focused on those shareholder returns, but we're going to make sure that that balance sheet stays strong into the future so that we can reap the rewards of that future commodity price. So our capital program is structured in a way that come mid-year, we'll have some optionality where we've got 13 wells that will look at the sentiment and what's happened in the first half of the year with respect to cash flow and our production. And we'll see, mid-year where things are at, and we'll make a decision at that point in terms of the well programs and our capital spending.
I mentioned you cut the dividend and you came on and you discussed that, but the dividend yield is still very robust at 8%. Would you call that sustainable now, everything being as it is?
Yeah, when you look at it, Amber, we're 45 days into the year, so we're still quite early into the year. I know that sentiment is extremely negative here as we go into the summer, but there's a lot of things that can change. And I think our position is that we give ourselves strength and optionality so that we can make those decisions after we see what the year plays out. We're not going to make a total knee-jerk reaction within the first 45 days of the year. We realize where prices are, but there's a lot of positive sentiment still to come here in 24 and into 25.
If natural gas prices do start to recover and move meaningfully higher, and reach a certain point, the ethos around being an unhedged company, I know, has been so pervasive, especially under Jeff Tonkin, and you've reiterated kind of continuing that at these levels. But say prices do move up, they double from here in nat gas. Would you reconsider that ethos, at least locking in higher prices so you can offer a little bit more stability to shareholders so they don't just, trade in and out depending on what nat gas is doing?
Yeah, I think that's certainly been a trademark to your comment. A trademark of Birchcliff is that we have full exposure for our shareholders to the commodity price. And that's really what a lot of them want. They want exposure to that commodity price because they believe in the future of natural gas and natural gas demand increasing into the future. Because look, LNG in general is a huge positive for the globe, for replacing coal-fired production in Asia and India and other. There's no doubt that in our minds, natural gas is that fuel of the future. And as we build out LNG, that demand is just going to increase over time. So we're really positive on the future, and I feel locking it in when we're in a low commodity price environment into the future is just not the right move today. Never say never, but that's not the right move today in our view.
Chris, thanks.